So good morning, friends. We have included the corporate ratios tool in the marketing tools in Palmleaf New. There are many companies, small, medium, even tiny companies, which are availing your services in terms of advices on life insurance, other investments, mutual funds, etc. They may also need a value added service in analyzing the financial performance of their company. Ratios help people, it gives them an understanding, a proper insight on how their company is functioning in terms of liquidity, profitability, solvency, and leverage. So to do this, all that we need to do, you look at this tool here, you need to take the profit and loss account and the balance sheet of the company, and from the profit and loss account and the balance sheet, start typing data here. You will find a pull down menu here to change the year. So whichever year you want to, you can type here and then do it. Let's say, for example, there is an item in the profit and loss account but not appearing in this tool. Let us say, for example, there is something called as sales incentive received from the government. Let us say, but that is not appearing here. So all that you need to do is type add row and then type sales incentive from government and then type the figure here. Similarly, under each of the heading, income and expenses, we have provided for you to add rows. And as you keep adding rows, or as you keep typing the totals here, figures here, you will get the final totals here. Net profit, gross profit, and all the other ratios which you'll require will be at the bottom of the whole sheet. Right now, this is profit and loss account and this is balance sheet. Down below, you will find here the calculate ratios tools. If you press this, then based on the P&L account and the balance sheet details which you have typed, the system will work out the ratios. For example, look, I have already done the calculation for Mrs. Venus Tools for both the years 23-22. So this is the ratio. Now you may like to know what these ratios indicate. All that you need to do is to click the caption here, net working capital. What does it indicate? It's a measure of a company's short-term financial health and its ability to meet its short-term obligations. A positive net working capital indicates the company is in a good position to cover its short-term obligations. A negative net worth can cause concern. It indicates that the company could have difficulty in meeting its short-term obligations. However, you have to see the industry trend also and for the same company for a past few years. Similarly, current ratio. The ratio is defined here. Current assets divided by current liabilities. You know that we have already done the net working capital, where we have already explained what is the current assets and what are the current liabilities. Current ratio above 1 means that the company's current assets are greater than the current liabilities, which is generally desirable. However, very high current ratio indicates that the company is not efficiently using its current assets. Maybe they are missing out on some investment opportunities. If the current ratio is below 1, then the company may find it difficulty in meeting its short-term obligations. Quick ratio, which is considered as acid ratio also. Now here, it gives with lot amount of accuracy how far the company is capable of meeting its short-term obligations. If you look here, it says out of the current assets, you remove the inventory part, then divide it by current liabilities. That means it's almost like having cash available to meet its current liabilities. Similarly, if we keep on going through this, each one of the thing we have given explanation here, each one of the heading. Debt to equity ratio. So little lengthy because this is a very important tool. This is a tool which comes under how the company is leveraging its debt. Go through it so that you can advise your customers properly. Now you also will know something where the companies are really worried about, concerned about, and would like to keep on increasing. 1. The return on total equity. 2. Return on total capital. Return on assets. Suppose there are investors in this company, then they would be interested in looking at earnings per shares. What is the EPS of the company? They would also like to look at what is the stock price of the company today in the market and in what proportion it is to the earnings of the company. PE ratio. So the details are given here. Some of the investors who are looking at the value based investments, they may even look at what is the book value per share of the company and price to book. And as you do it, save the data. You can export it as PDF so that the PDF file will be available to you and you can forward it to the customer. See, I've already exported the data. Now I can go here, I can open the tool, and from there I can open the file, and then I may choose to send it by WhatsApp or by even email or whatever. Maybe I can even give them a small forwarding letter and say these are the areas where the company need to focus. Probably when they are drawing the next year plan or the 3-year loading plan, they can keep in mind these ratios. It will be proper guidance for them. Like, friends, this will be a real value added service you will be rendering them. I've come across many companies, small, medium, even tiny companies. They have bookkeepers, but they don't have, chartered accountants who analyze these balance sheets. There are companies who engage the service of chartered accountants, but they don't study the ratios. They just file income tax, provide the P&L and the balance sheet services to the companies. So whereas you can add value to them. In case you have any doubts on this, here you can always use the Ask RG menu here. You can type it here, Ask RG, select the topic, anything for that matter. You can go to others and let us say the debt to equity ratio needs explanation. For example, I'm just giving you an example here. You can even type anything else also, like, or you can give a company specific and submit it. Then I'll get it by my email so that I can reply you later on. Normally I reply the same day, otherwise the next day you get the reply. Sometimes I may reply it on the mail itself. Sometimes I may ask you to call back because it needs a detailed discussion. Thank you, friends. Use this tool and add value to your customers.